the second largest holder of U.S. treasuries is China. That said, China is on the verge of collapsing economically, primarily due to bad debt associated with their commercial real estate development portfolio. And so there are 40 banks that have recently just been wiped out during China's banking collapse. And I saw this article come through, which D, you can read a little bit on that. But I'm going to give you a summary of what I think the byproduct of that is, and how that's going to impact us here in the States, because that's probably what's most important to everybody watching the show.
You want me to read it first and then you give it, or are you going to give your summary first?
You go first and then I'll follow.
Yeah, that's good. Okay, so this comes by way of Microsoft. Microsoft Start, MSN.com, says China's banking turmoil. 40 banks vanish as crisis deepens. This comes by way of RKE. The Chinese banking sector is facing a severe crisis. In just 1 week, 40 banks disappeared. In the collapse of the Zhengzhi Bank, I think I got that one right. That might have been pretty good. Has further deepened the sector's problems. Experts warn that the situation could have severe consequences for the global economy. The Economist described the situation in the Chinese banking market. It was noted that approximately 3,800 banking institutions were threatened in China. Their assets are 55 trillion yuan, or 7.5 trillion US dollars, representing 13% of the country's banking system. The magazine emphasizes that these banks have long been poorly managed and have accumulated vast amounts of bad loans. Excuse me. The report states that many of them that lent money to developers and local governments, exposing themselves to the impact of the real estate crisis. The author notes that in recent years, some banks have revealed that 40% of their portfolios are non-performing loans, which means what, Samson?
It means that the loans aren't being paid back at the moment.
The rare disclosure of a bank's problems may underscore the seriousness of the situation. So they're digging into this quite a bit. I won't read all of this, but here's a couple of other key facts. The expert forecasts that slower growth in China's economy will exacerbate banking problems. He believes the situation will most likely end with massive liquidity injections, economic stimulation, and investors fleeing towards hard assets, which if you don't have those, this thing goes bye-bye. S&P experts quoted by The Economist estimate that repairing China's banking system could take up to a decade. However, official data may still not reflect the scale of the problem. The 2023 report of the People's Bank of China states that 3,655 banks whose assets accounted for 98.28% of all assets deposited in Chinese banks are safe. The Chinese banks also confirmed that the risk concerns a portion of the small and medium-sized financial institutions operating in rural areas. According to the document, large banks receive good ratings, indicating the stability of the economic system. This last paragraph here. Goldman Sachs estimates that debts of the most important Chinese regions at $13 billion. Some of these liabilities are public bonds, and defaulting on them could damage the entire economy.
Doesn't sound too different from what's happening here in the States.
No, it doesn't.
The benefit to us as the United States is we've always been the best house in a bad neighborhood, right? I mean, the U.S. dollar is still a reserve currency for most countries. Now, does that remain the same? I don't know. Does a weakening of China and their demand for U.S. dollars go up or down? Is the Fed going to need to step in and adjust rates in order to accommodate that? I'd say right now we're not on the best of terms with China in terms of,
correct,
socioeconomic collaboration as they've gone and formed BRICS with Brazil and Russia and Iran and China and what's that?
I don't know what the S is.
I forget what the S is. Anyways,
let's find out because I should know that.
Yeah, so
South Africa.
So it could have. That's what I thought. So it could have some impact here in the States. I think the positive of this and the transition that we're going through is we are becoming an America first type of country. Manufacturing is moving back stateside. We are no longer a net importer. We're becoming a net exporter. Now that might impact us on some of the export side of things, but truthfully, the United States does not really need to participate in the global economy. So this could just be apropos for what's happening at the end of this 100-year cycle that we've been running on post-World War II. And this is just, part of the reset, the great reset that we're going through. So that's what I think is happening. I don't have a clear read on how it's going to ultimately affect us other than it might push the Federal Reserve to to do some things to manipulate rates, which is usually what their strategy is.
It's wild. Going back to where we were leading off, there's very little certainty anywhere.
Right.
It's just like that piece is, I'm catching that over this last month or so, just looking at some of the stuff. It's like the uncertainty is everywhere. And so to Buffett's point, right? Like, how do you position yourself to minimize that, the downside of that uncertainty working against you? And then,
yeah. And to echo Warren Buffett, be fearful when others are greedy and greedy when others are fearful. And I think we are moving into a period, and we've probably been in this period for a while, where people are very fearful about what's happening. They're still spending money and the economy hasn't totally locked up, but they're losing jobs. Interest rates are at all-time highs, and there's not really any kind of relief in sight. And so there is no better time to be starting a business, buying a business, pushing your business
Taking
forward,
action.
spending time on marketing, investing in marketing, doing all these things that everybody else is pausing and not doing because everybody's fearful. So now it's time to be greedy, right? In a good way.
Well, yeah, when you say greedy, take action. Just interpret that as take action.
Right.
Get in position to make moves and make them.
Yep. And kind of going a couple legs back in this podcast, but this is why it's important as entrepreneurs to be stacking other investment vehicles as we go, keeping powder dry, having other means to get liquidity, because opportunity is presenting itself and will continue to present itself, I think, over the next year. I mean, in terms of commercial real estate debt in the United States, a lot of that's coming to maturity in 2025. So we're getting through the election. Not much action happens in the stock market during the election. President gets in. Who knows what's going to happen? Are they going to reduce interest rates? That might be the only thing that ultimately saves a lot of this commercial debt crisis that's happening. And similar to China, the majority of this bad debt is currently owned by smaller banks. And so does that mean that we see a roll-up or a consuming of these smaller banks? I don't know.
Yeah, but it might mean some assets are up for sale.
It doesn't mean, it means some assets are up for sale, but I think that China has been operating no differently than we have in the United States.
Yeah.
And so this might give us some clues about how things might play out here.
What's really wild is that people have been saying, for many people I know for years, actually including you, have been saying that this is all a smoke show. The strength of the Chinese economy.
Yes.
I've been saying this is a smoke show for a long time.
Yeah.
It
is. And it's becoming clear.
Yeah.
Because a few years ago, like a guy like Ray Dalio was like all gung-ho about China.
Right.
So, and I was like, what are you smoking, Ray?
Whatever it is,
he's a
good.
smart guy. He's changed his tune since then, but
yeah, whatever it is, it's high quality. All right, so let's
that's some high quality stuff.
let's go to this report here on Bitcoin that comes by way of Fox News, posted by Bitcoin Magazine, that this astronomical number by way of Fox News, Bitcoin is up. I won't even ruin the clip. Actually, you can see the caption, but let's listen to the clip and then let this gentleman do his job.
Why do people love Bitcoin? Why do they love crypto? Well, I got to tell you something. 28% of young folks say they want it, and I'll tell you why. Going back to 2013, the number one performing asset, Bitcoin, 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 Bitcoin. How much? How about 315,000%? 315,000%. Why do people love Bitcoin?
Charles Payne there with the bomb drop, but our boy Bobby Schell.
Well, real quick though, before we jump into that, I think this is just a telling of why it's important to have a longer term horizon.
Yes.
So one of the things that's an interesting dichotomy is if you hear Warren Buffett talk about Bitcoin, he's hating on it. And that might just be because his horizon isn't as long as it once was. Because he says it's a farce, it's this, it's that, it's never going to be here, yada, yada,
Speculation.
yada. He thinks it's a bet against the United States and America, which I don't think it is. I think it's just a new form of technology that he is unfamiliar with. There's a lot of technology companies that Warren Buffett passed on, so keep in mind.
Yeah.
He's the Oracle of Omaha, for sure. Great investor. But there are plenty of other great investors who understand technology and understand the internet and understand things. Warren Buffett will tell you he doesn't invest in things that he doesn't understand.
Correct.
So on that note, Warren Buffett would say that this is a farce. But if you look at the long-term time horizon, And the best indicator of future performance is past results. I would say that there's enough track record here. I think 2011 is when the first one came online, maybe 2010.
Was it 11? Yeah.
So we're there. I mean, 10 years of consistent upside is enough time, and it starts to normalize the swings in the market.
Yeah, 315,000%.
Yep. So
that's pretty significant.